Hello, everyone. Good morning to you all, depending on what time zone you're tuning in from. I wish you also a good afternoon and good evening. As always, I'm very, very excited to welcome us all to yet another promising edition of the Forex Morning Mastery as we get ourselves prepared to join market participants as they round off their trading activities ahead of the weekend. Happy Friday to everyone in the house, and hope you're all doing very well. And how was your week so far? Well, in this community, we have been monitoring three financial instruments, which includes the USOILSPOT, JPY, and of course the XAUUSD, popularly known as the gold spot. And so far this week, we've done fairly well across the asset we are monitoring. Remember, the US All Spot, we have been buying the US All Spots since the beginning of the week, banking on the taking advantage of the geopolitical risk in Russia and Ukraine, and of course the Middle East. And on the XAUUSD also, we have been buying too, making some significant amount of profit on that one, except for the USDJPY, where we have been struggling to gain some traction in that regard. So it has been fairly a beautiful week for us all. And for those of you who has been part of this journey, I congratulate you, kudos to you, and well done for being faithful to our analytical approach. So today we are going to be delving into the market to see how well these positions, all our trades have been doing. And of course, we are going to be preparing to join the last trading day of the week. And of course, we are also going to be taking into account the psychological peculiarity that comes with last trading day of the week. You all know that when it comes to the last trading day, we usually see potentials for profit-taking activities as market participants round off, and this usually might lead into reversal setups where we see price action moving in the opposite direction of the prior leading price action. So we are going to be taking all of this into account while we review the current market dynamics. So you want to stay tuned in, as I do have simple setups that we are going to be using to navigate the market today. And for those who joining us for the first time, you're highly welcome on board. As always, very excited to have you join us this morning. We run the Forex Morning Mastery 3 times in a week, that is Mondays, Wednesdays, and Fridays, where we come together as a community to have a deep understanding into the behavioral patterns of market participants through the lens of price action and fundamental analysis. So I wouldn't want you to see this as a signal service platform, but instead an educational avenue where we come together to become a better trader. So I welcome you on board and encourage you to actively engage in the comment section. And do not forget to give the video a thumbs up. Your likes are very valuable to me. It's a source of inspiration to me to continue to do more of this. And of course, it also goes a long way in helping this community to grow. The more likes we have, the more the like tallies with the number of people on board, the higher the chances that the YouTube algorithm will push the video to a wider audience of traders who may also find this content beneficial to them. So thank you very much, guys. For those of you who are liking, and for those who are yet to like, please do so. I really appreciate that, and thank you very, very much. So with that being said, here we will be diving right into the business. And for those of you who have been with me for a while, you all know the daily routine. The first thing we want to be doing is to keep tabs with the fundamental factors that has been influencing the sentiment in the market so far this week, and of course look at what the market participant will be looking forward to today to decide whether they are going to be holding onto their positions or doing some profit taking ahead of the weekend. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that valuable information and most importantly, timing to strategically position ourselves for the next move. Now, based on the asset we have been monitoring since the beginning of this week, we have focused on impactful events from both the United States and the Japanese economic docket. So we usually focus on high impactful event due to the volatility they bring into the market. But in case scenarios where we do not have any high impactful event for that day, we include and filter in mid-tier economic features to have a broader view into what market participant will be considering for that particular day. And so far this week, we've had some interesting development across both economic dockets. Look at Monday, November 18th, we had the Bank of Japan's governor who spoke, and we had a little bit of insight into the monetary policy, the economic outlook, and what the intentions of the Bank of Japan are going forward. He spoke on Monday and he also spoke on Thursday, and from the highlight we were able to get from his speech, the major important thing that market participants are holding on to is the chances that Bank of Japan is likely going to be increasing interest rate anytime soon. And in fact, he went further to say that it may come as early as the month of December. So this is further giving some positivity to the Japanese yen market, and coupled with the intervention narrative that has been rippling across the market, the Japanese yen is beginning to gain some traction, which we are still not sure if this will sustain considering the strength of the US dollar at this moment. So for the USDJPY fans, we are going to be going into the market dynamics on the USDJPY very soon to see how the market are digested this information and how they might likely prepare for the weekend. Then on Tuesday, we had the building permit, which was one of the events I told us to look out for, considering the fact that the housing sector is considered to be a sensitive area in the United States. And for those who do not know, we talked about the fact that the building permit gives us an insight into the number of new permits that were given out for new construction projects. And we also went on to say that if the data comes in higher than expected, it shows that the housing sector is doing very well, which will in the long run dovetail to positivity for the US dollar. So we were anticipating a 1.43 million growth as against the 1.425 million for last month. However, the data came in way below what the market had expected at a deficit of 0.6 million, which was not an impressive figure at all. And this led to some indecision in the US dollar market, as we saw during the midweek. And then we also saw the export, import, and merchandise trade balance from the Japanese economic docket on Tuesday, which gives a mixed signal into the trade balance situation in Japan. So the export actually outweighed the imports, but the value of the export was not able to offset the value of the import. So this still puts the trade balance of Japan in negative, as you will see here. And this, of course, is not a good signal for the Japanese economy as well. And this obviously is also rubbing off on the Japanese yen. Then on Wednesday, we had a bunch of speeches from Fed officials. And then on Thursday, we also looked forward to the initial jobless claim count. Remember, we talked about this. This is a weekly report that gives us an insight into how well the labor sector in the United States is doing. And the initial jobless claim measures the number of people filing first-time claims for state unemployment insurances. So we look forward to see how many people are filing for unemployment insurance. So those who don't have jobs will come out to file for these insurances. And when the figure is higher or larger than what market had expected, it shows that there is weakness in the US labor market, which could reflect negativity in the US economy and rub off on the US dollar negatively as well. But if the data comes in lesser than the previous month or lesser than what market had expected, it's a positive sign for the US economy, and this could be a good signal to buy the US dollar. And from the look of things, the actual data actually came in positive, as we saw it coming at 213,000 as against the previous month, which was at 219,000, and then against the market expectations, which was at 220,000. So it was a very tight figure, giving us an insight into the resilience of the US economy, a tight labor sector, and of course, the US dollar banked on this during yesterday's trading session, as we saw the US dollar did some recovery during the course of yesterday. So we are going to be looking at that today and see how the market had played out during the course of the week from a technical standpoint, and taking into account the sentiment that is driving the market behind the scenes. But before we go into the details, let's run through what our expectations are for today as regards to the economic features from both economies. Now, for today, Friday, November 22nd, we are looking at a bunch of impactful events, though we have one high impactful event from the United States and a couple of mid-tier economic features from the United States as well. Now, to top the list here is the S&P Global publication, which we are going to be looking forward to at 2:45 p.m. UTC, and that's about 4, 5, 6 hours from now, 2:45 p.m. UTC. So we do want to be marking out our calendars on that one. And what does the S&P Global tell us? Well, the S&P Global is a publication released by the S&P, and it gives us an insight into the health of the manufacturing and service sector of the United States. Now, it runs an index of 0 to 100, where anything above 50 is considered as positive. If we see figure coming 50 and above, it shows that that sector is expanding, while if the data comes in below 50, it shows that that sector is contracting. Now, if you look at what we are looking at here, especially for the manufacturing PMI, last month, the data came in at 48.5, way below the 50 mark. And in fact, the last 3, 4, 5 months, this data has been below 50, showing us how struggling the manufacturing sector is in the United States. Now, economists are projecting that we may likely see 48.8, a little bit higher than the previous month. So we look forward to see what the actual data will be. Will it be just as market had expected, below expectations, or even beyond expectation? And definitely this will give us an insight into how market participants will be playing around the US dollar ahead of the weekend. Then we also have the service PMI, which will be giving us an insight into the health of the service sector in the United States, a sector which has been very resilient in the last 1 year, thereabout. It has been recording above 50 figures consecutively, month in, month out. So the previous month came in at 55. Now market are expecting a 55.3, a little bit higher than the previous month, which is also a very good sign that the service sector is resilient at this point. So we'll look forward to see what the actual data is going to be on that one. Then another event I would like us to include into our watch list for today is the publication from the University of Michigan, and that is the Consumer Sentiment Index. Now, this data here measures how optimistic or pessimistic consumers feel about the future of the US economy. Now, a higher index will indicate confidence, suggesting stronger spending and economic growth, which can boost the US dollar simultaneously. And on the other hand, a lower index will show that consumers' concerns about the economy, potentially signaling weaker growth and leading to a weaker US dollar. So the data for the previous month came in at 73, as you will see here. And at the moment, economists are projecting that we will be seeing a 73.7, which is a positive signal. So we look forward to see what the actual data will be. The timing of this event is 3 p.m. UTC. That's 4 p.m. local time. Then the consumer inflation expectation is a projection actually that tells us, that gives us an insight into what the inflation in the economy is looking like, which for me is not something to not a top one for me to look out for. Then finally, that will have happened when the market had closed, as Bowman's speech, which is not necessarily important at this point. So for me, my point of reference for today will be the S&P Global Publication and the Consumer Sentiment Index, which definitely will be coming up during the United States, the New York session. So let us mark out the timing of this event so that we can be around to see how the market will react to this event. So moving on right now, the next thing we are going to be doing is to go right into the charts. We want to see how market participants are anticipating this event. And like I usually say, the anticipation of this event will definitely reflect on the chart as structural patterns to look out for trading opportunities. So major key players in the market usually have insiders in this department. So they usually get first-hand information even before these data are released. And as a result of this, they will be positioning themselves ahead of these actual figures. Now, the anticipation, their positioning will definitely evolve into structural patterns that we as retail traders can use to strategically position ourselves for the big move. So that is what we are going to be looking at right now. So with that said, let's dive right into the chart. So as always, the first asset we are going to be looking at this morning is the USOILSPOT. And of course, we have been doing pretty well since the beginning of the week. Remember, we have been buying the USOILSPOT at every point, at every opportunity we cite on this chart. For the sake of clarity, let's rewind and go back to the beginning of the week to see how the week started and what led to the decision that made us to consider buying the USOILSPOT. Now, to start with here, I would like us to see the 4 hours time frame, the higher time frame, where we identified the fact that price action was sitting on a robust demand zone. So this zone here had been persistent for the last 2 to 3 months, as you will see, despite the strong bearish momentum. As soon as price drops into the zone, we see our buyers take over the market, pushing price to the upside. This continued into the month of October, and we saw what happened at the beginning of this month. And last week, we saw what happened here. Buy pressure resumed around this area. And this week as well, we saw buy pressure resume around that area. So at this point, at the beginning of the week, we were looking out for buying opportunities due to the fact that price is sitting above a robust demand zone. Now, in addition to that was this descending trend line we marked out here after connecting the series of lower highs since the beginning of the month of October. Now, look at this. We were able to spot this, and something interesting happened at the beginning of this month as we saw price action break out of that descending trend line for the first time. And theoretically, we do expect that when price action breaks out of a key structure like this, price is likely going to come back, retest the structure in an attempt to continue the uptrend move. Now, based on this ideology, we were looking out for bullish setup at the beginning of the week. So with our key level sitting above around the $67 area, if price remains above it, we definitely want to be buying the assets. So what we did was to scale down into our execution time frame, that is on the 1 hour time frame, to look out for structural patterns that will give us an insight into how market participants started this week. Now, when we scaled down into the 1 hour time frame, things became a little bit clearer as we were able to identify a range bound structure which became a framework, let me say a psychological framework on how price is going to behave for the week. So scanning down here, you will see that we had for the first 10 to 12 hours, we saw price action confined within a range oscillating around that key level between the $67.30 level and the $66.58 area to emphasize the prevailing uncertainty at that point in time. Now, usually whenever we identify this kind of range-bound structure, the next thing we usually do is to exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Obviously, the latter never happened, as we saw price instead continue to find buy pressure, and we saw price break out both our key level here and at the resistance line of the range bound structure, giving us a beautiful opportunity to join the uptrend move. So since that moment, we have been buying the US All Spot, as you will see here, and we were able to capture this move. Remember, I told you I was buying above the 67. We saw price move over 230 pips, while if you're taking from here, price moved over 200 pips before that opposite scenario happened following the EIA and API reports during the midweek. Now, on Wednesday's trading session, this was where we were on Wednesday, and I was saying here that we will continue to use this ascending trend line as a yardstick to guide our trading decision, that as long as price remains above the ascending trend line, we'll continue to look out for patterns and structures that support the idea of buying. So as a result of that, we decided to place another buy stop order above the $69.50 level, and of course we saw price break out of that structure, moved about 35 pips, but for me, I was late to move my stop losses, so I got taken out of that one at break even. Then we saw price drop below the trend line, giving us a sell position as well. We saw price move about 50 pips thereabout before we got taken out at break even. Now, during my commentary yesterday morning on Thursday, this was the setup I was showing us yesterday. So we had a $69.15 level where we said we will be buying, for those of you who saw my commentary on my Telegram platform. And then I also mentioned that we will be adding more buy position at the breakout of the $69.82 level. Well, if you had taken advantage of both, you should currently be having two buy positions minimum, one running with about 120 pips, while the second one is running with about 56, 57, 58 pips in profit. So we have approximately 180 pips running at this point in time. So congratulations to everyone who capitalized on these opportunities. So what we are going to be doing now, as we all know, when price moves significantly in our favor, the next thing we want to be doing is to move all stop losses to secure the current position. And if you would ask me, I will be suggesting that anywhere between the $70 level and the second entry point at the $69.80 level is looking appropriate to move our stop losses to. While we place our stop losses within the zone, we also give enough room, enough breathing space for price action to move around. Now, remember, we're looking forward to an economic data from the United States today, the S&P Global and the Consumer Sentiment Index. And we all know that this asset is a US dollar denominated asset, and whatever happens to the US dollar will definitely rub off on this asset. So if you still have a buy position active at this point, you want to be moving all stop losses to secure the current buy position. And kudos to you for capitalizing on this one. Now, as we prepare for today's trading session, what are the chances that this uptrend scenario will continue? Will today be a profit-taking activity as market participants anticipate the weekend, especially in an era where the geopolitical risk is on the edge right now? We have the Russia-Ukraine war. which continues to escalate by the day. The conflict intensifies as missiles continue to be exchanged, and in fact, threat from President Putin raising concern over potential crude oil supply disruption, and is also raised the bar for his nuclear usage of nuclear rhetoric, which is also a major concern from that particular area. So for me, the path of least resistance still remains to the upside. However, if we take into consideration an holistic view into the fundamental drivers, the EIA report we saw on Wednesday showed us that crude oil stockpile increased in the United States by 0.54 million barrels for last week, and this in fact slightly exceeded market expectation, signaling a potential oversupply. Now, let me quickly explain this. I have explained this several times for those of you who have been with me for a while, but for those who are joining for the first time, let me quickly explain the theoretical implication of for the crude oil stockpile to increase. Now, when the crude oil stockpile increases, it simply means that the supply is enough to cater for the demand in the markets. In fact, it was so enough that they had to even save some. So the one that saved is the stockpile that has been increased. So what this simply means is that supply is much more than the demand in the market. And from our simple economics, when there is high supply, what happens to price? Price tends to drop. Now, because of this, we cannot ignore the potentials that sellers could also come into play. Then another factor that we cannot ignore here is the surging US dollar index. The dollar is doing very well at this point in time, and when the value of the dollar rises, the commodity, the US crude oil commodity becomes very expensive for foreign buyers to get, so potentially capping the demand. So when this commodity becomes expensive, demand will reduce, and when demand reduces, what happens? Supply will increase, and when supply increase, what happens? Selling pressure will be exerted on price, and this could push price to the downside. So in summary, the geopolitical tensions are providing upward momentum for oil prices, but strong inventory build and the strong US dollar may act as a limiting factor for oil prices. Now, with this counterbalance narrative in this market, how are market participants digesting this information? Well, this can easily be revealed on the chart if we look at the price action, the character of price action since the beginning of the week. And of course, if we look at this closely, you would have noticed that price action has been finding higher highs and higher lows. So I would like to connect the series of higher lows. I think we have a major trend line here. So I'll just delete this one. We no longer need this anymore. So this is the trend line we are going to be using for today's trading session. And of course, you know how we use our trend lines in this community. So as long as price remains above the ascending trend line, we will continue to look out for patterns and structures that support the idea of buying. Now, let's zoom into the current structure. What is really going on in the last 24 hours? So price action tested the $70.50 area. This is the resistance line for this week, as you will see here. And what has been going on here in the last many hours now? Let's look at this together. 1, 2, 3, 4, 5, 6, 7, 8, 9. Since the last 9 hours, we can see selling pressure has persisted around this particular area, giving us signs that sellers are getting stronger. And so the question here is this the beginning of profit-taking activity today, considering today being the last trading day of the week, as market participants are expected to round off their trading activities ahead of the weekend? Or is this just a temporary retracement that will see price action retrace back into any of the ascending trend line, which interestingly shares a confluence with our second entry at the $69.80 level to continue the uptrend move? Or will price action break down the trend line to incite a sell-off, detailing a profit-taking activity going on? So for me, this is one of the major reasons I said we should all move all stop losses secure the current position as we continue to monitor price action around this area to see if it's going to be breaking the trend line or not. But the fact that price action still remains above the trend line, we'll continue to look out for buying opportunity. So what I will be doing personally at this point is to see price action come into the trend line, any of the trend line, and then I want to see continued buy pressure happen, and if possible, price action evolves into a reversal pattern like a double bottom structure, inverse head and shoulder, or a falling wedge. Then I want to be buying the breakout of the neckline to continue the uptrend move. And if price goes ahead to break out of the $70.50 level, I will be adding more buy positions to my existing trade. So that is how I will be looking at buying opportunities at this particular point in time. However, in as much as we are looking out for buying opportunities, we cannot ignore the potentials that sellers can also come into play, pushing price to break down the ascending trend line and continue the bearish momentum. So in as much as this is a possibility, especially after considering the strength of the US dollar and the rising US crude oil inventory stockpile we talked about earlier, where will be most suitable for us to continue a sell? Now, for me, looking at the structure here, I want to be marking out a level around the $70 area, what a psychological level that is as well. And so I will mark that one right here. So that's a $70 mark. You also want to be doing that appropriately, as this will be serving as a yardstick to guide any selling opportunities. Now, if you look at the $70 mark here, since the Asian session, you can see it has been a buying niche. Every attempt by sellers to break through has always failed. Now, I want to see how the market will react to this trend line, to this key level. Now, the key level also shares a confluence with that ascending trend line. So if it so happens that price action breaches both the $70 mark and that ascending trend line, I will definitely be looking out for selling opportunities. But we are not going to be placing a sell stop order in this case scenario. As you all know, the trend is bullish since the beginning of the week, and any form of breakout could turn out to be a false breakout. So what we want to do here is to ensure that that breakout is a true one, and the only way we can know it's a true one is by looking out for confirmations that sellers are getting stronger and buyers are weak to join a bearish move. And for us to do this, we want to see price action break down the structure first of all, and then do some retest of either the ascending trend line or the $70 mark, where continued selling pressure below this area on our lower time frame will be a beautiful signal that buyers are finding it difficult to climb back above the ascending trend line, giving us a good opportunity to join a sell. Now, if we are joining a sell, please, I want to emphasize this. Let's ensure that we move all stop losses as price action moves significantly in our favor, as we could still see price climb back up due to the geopolitical risk we talked about earlier. So let's ensure this is in place. So if we are selling, move stop losses as soon as price action moves significantly in our favor. So that is how I'm going to be managing my trade on the USOILSPOT for today. So I encourage us all to mark out these levels, and in fact, let me zoom in. Our center of focus for today is right within the $70.50 level and the $70 area, where depending on the direction of the breakout will determine where price action will be going. Remember, I said this, we are only going to be selling at the breakdown retest of structure. That's what will confirm a sell for me, and we can place a buy stop order above the $70.50 area. So we have an engulfing bearish candle right now, but we can't say it's an engulfing one yet because this candle still has about 44 minutes to go. So it still has a lot of time to play out. So it could still turn out to a situation where we see double bottom structure here to continue that uptrend move. So let's be very, very careful, patience, and let's see, wait for the structure to mature before jumping into any positions. So this is my simple view on the USOILSPOT for today. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking a moment, let's say 5, 10, 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys, and do not forget to give that video a thumbs up. Thank you very much. All right. So I see you, Adeni Babalola. Good morning to you. Happy to have you around. I'll take that as a compliment. All right. I already responded to you on WhatsApp, Adeni Babalola, if you are still there. Okay. So so I think I still have another. Okay, Diana. Good morning to you, Diana. How are you doing today? Glad to have you around. It's been a long time since I saw you. Trust you are doing very well. Thank you very much. All right. So in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. Ensure you mark out the structures on your chart. This is what we are going to be using to help us navigate this market today. We have a range-bound structure between the $70.50 level and the $70 area. And of course, we have that beautifully identified ascending trend line, which will be helping us to know if this momentum, this bullish momentum, is still valid or not. So that is that on the USOILSPOT, and I wish you a best of luck on this one today. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, that is the US dollar against the Japanese yen. So we have been trading the USDJPY for the past 3 weeks now, I guess, after stalling on the GBP/USD due to the choppy market condition we saw at the beginning of last month. And we've not done bad on the USDJPY at all, though last week and this week has been a little bit choppy as market is yet to gain a significant traction in a particular direction. And this is due to the uncertainty in this market, where the narrative that the Bank of Japan could intervene at any point in time, and this has brought in some skepticism into this market, making it a little bit difficult to navigate if you don't know what you are doing. So far this week, we have been buying the USDJPY, though we saw some signs here during the midweek where sellers gained some traction. And this was further supported by the risk-on sentiment in the market, where the prevalent risk-on environment reduced the chances for the US dollar at this point in time. And of course, we also saw the core inflation, excluding both energy and fresh food costs, rose to 2.3% in Japan for the month of October, which exceeded the Bank of Japan's 2% target, fueling expectations of a potential rate hike in December. And this was further buttressed by the Bank of Japan's governor, that is Ueda, during his comment. And he also went on to consider the impact of FX movement could keep the door open for another rate hike before the end of the year. So this for me had helped the USDJPY find some little bit of traction as we saw price drop back into our key level at the big during the last 24 to 36 hours. Now, for those who join us for the first time, let's quickly run through what really happened at the beginning of the week and how we managed to navigate this market. We've been buying anyways, and okay, let me talk about this for a moment so we can all assimilate this together. So at the beginning of the week, we had a little bit of choppy market condition as we saw price started the week around the 154.500. So we saw price establish a resistant line at the 155.150 and also established a support line at the 153.850, giving us a range bound structure to work with. And you know what this range bound structure means. It emphasized the prevailing uncertainty at the beginning of the week. Now, one of the things we decided to do here on Monday was to look out for buying opportunities. Remember what we saw on the 4 hours time frame. Let me quickly run through that quickly so that we can all be on the same page. So right here on the 4 hours time frame, after taking into account the character of price action since the beginning of the month of October, we were able to spot an ascending channel. This is the support line of the ascending channel. And we had the resistant line of the ascending channel right here. And look at how beautifully price had consistently respected that support line. Every time price drops in, we see buyers come in to push price to the upside. And the beginning of the month of November saw price action transition into this ascending channel. Now, the last couple of weeks, I've seen a situation where sellers have been finding it difficult to break down the support line. And due to this understanding, we were leaning towards an uptrend scenario where looking out for buying opportunities above our key level at the 154.00 area was the order for the week. So that was what we were looking at. So as long as price remains above the 154.00, we maintain a bullish bias. So with this understanding, going down to our execution time frame, that is the 1 hour time frame, this was what we were looking at. So we decided to buy at the breakout of the 154.500 and then had more at the breakout of the resistant line at the 155.150. We saw the first buy position do very well, moved over 135 pips, while the second buy position moved over 70 pips, giving us roughly 200 pips before that bearish momentum began on Tuesday, I think. Is it Tuesday? I think Wednesday, yes, Wednesday. And this was following the Bank of Japan's remarks and the potential for interest rate hike in December, which gave the Japanese yen a little bit of traction. And I can remember telling us on Wednesday that I will not be selling if this ascending trend line is breached and broken to the downside. I told you, I said, if you are a scalper, a day trader, or a short-term trader willing to take advantage of short-term trading opportunities, you can as well take advantage of this bearish move, which was about 130 pips thereabout, into the 154.00 area. So if you are a scalper and a day trader who took advantage of this 130 pips move, well done to you. What I said I will be doing to sell the USDJPY is for me to see this ascending trend line breach to the downside, and of course the 154.00 before I can consider selling, because I am looking at a long-term perspective instead. So I mentioned here that we should sell if you are a short-term trader, and of course wait to see how the market is going to be reacting to the 154.00, and that if we see any form of reversal pattern here, we are going to be joining an uptrend move. And this was exactly what happened. We saw price as soon as, hold on a second, so as soon as price action dropped into that key level at the 154.00 area, If you scale down to your 15 minutes or 10 minutes time frame, you'll see a reversal setup here. And in fact, if you missed out on this one, the market came back to retest the structure. And since then, it has moved over 95 pips before dropping into about 50 pips at this point. Personally, I already have my stop losses moved to break even. So that is where I'm placing it at the moment. And I encourage you to do so as well. Or if you want to take it a little bit further by putting at 154.200 with a profit of about 20 pips, that is well and good as we continue to monitor price action around this area. So the week has been a little bit choppy. Buyers though did gain some momentum at some point, but failed to gain more traction as sellers come into play. And this is supported by the Bank of Japan rate hike speculations, interventions, and of course the inflation, which was recorded to be above the Bank of Japan target. Now, in as much as the yen has gained some temporary traction in the last 24 to 48 hours, I still want to believe that buyers of the USDJPY still have a chance of going much more higher than this. And this is due to a bunch of sentiments behind the scenes which we cannot ignore. One of which is the sustained US dollar strength, which we have talked about several times, which it currently is bolstered by the elevated treasury bond yield and expectations of a less dovish Fed policy. And this is likely going to limit the JPY's upside. Now, we also talked about improved U.S. economic data. We saw the better than expected U.S. weekly jobless claim count, which shows that the labor sector is tight and, of course, will definitely rub off positively on the U.S. dollar. And then the resilient U.S. economy cannot be taken out of the picture, and expectations of Donald Trump's tenure to bring expansionary policies is also favoring the US dollar at this point in time. Now, if we look at the Japanese sector, the Japanese scene, there's still concerns concerns about the political uncertainty, which might delay the Bank of Japan's rate hike plan. We talked about this about a week or two ago, where the major party lost the parliamentary election, which is not a very good sign for them. And they need this. The major party needs the approval from the parliament to ensure this rate hike. So these are the little bit of hiccups that still makes me feel that the USDJPY has a room to continue to the upside. However, to be on the safer side, we should just move on stop losses, secure the current buy positions while we wait to see how the market reacts. So this just tells me that despite the mixed driver, the Bank of Japan, the potential for Bank of Japan rate action and geopolitical risk may still lend some support to the Japanese yen, so we cannot take that out of the table. Though headwinds from the risk-on sentiment and US dollar strength continues to cap the Japanese yen's gain. Now, in the mix of this uncertainty, how is the market reacting to this development? How are they digesting this information, and what plans are they making ahead of the weekend? Well, from what is going on here in the last how many hours is that? I think about 12 hours or so. We can see the market has been doing a little bit of consolidation, which started around our key level here and culminated around the 154.900 area, giving us a consolidation phase at this point in time. And when we see a consolidation like this, what does it tell us? It tells us that there is an indecision going on in this market. So we just need to exercise more patience and wait for this structure to mature. Now, with all of this, let's look at the 15 minutes time frame. Let's see if we can identify a structural detail that we can use to help us position ourselves ahead of today's economic event. Remember, we are looking forward to the Consumer Sentiment Index and the S&P Global publication. So let's see if we have a structure here on the 15 minutes time frame that can help us put this into play. Now, first of all, we have a descending trend line here. I hope you're following me. If you have questions, feel free to let me know in the comment section. So we have a descending trend line here, as you will see. Let me thicken this a little bit to emphasize its importance at this point. So if we bring back our candle chart, you can see how this area, this trend line, was serving as a barrier for buyers. This was yesterday's trading session. It was a barrier here, and then barrier here. Then during the early hours of today, we saw price action break out of that trend line for the first time. Now, theoretically, when price action breaks out of a key structure like this, we expect that at some point in time, price will come back, retest the structure to continue that uptrend move. Now, the last 1 to 2 hours, I've seen price action retest the structure. Now, will this be a platform that will send the USDJPY go higher for today? Well, a lot of patience will be required here. So this area here, for me, is going to be our key level for today's trading session. So we want to mark this level out appropriately. So we have the 154.450, 154.450. So I usually like to use psychological levels. You know, as human beings, we negotiate in round figures. So we have the 154.450 level right here. So you do want to be marking that one out. So here we go. Then what else do we have here again that we can actually, I think we have a trend line here. But this is a temporary one anyways. It's not that strong. When I have trend lines on 15 minutes time frame like this, I'm usually skeptical using them as a yardstick. So I will just lighten it up a little bit as it's not that relevant at this point. So let's see. Then bringing back our candle chart. So here we go now. We have the critical juncture. Look at how both trend lines and this level at the 154.450 all share a confluence, making it a crucial juncture in this particular market. So whatever happens around this area will determine if we are going to be buying or selling. So depending on how market participant reacts to this price level at the 154.450 will determine if we are buying or selling. But if you look at the structure from a theoretical standpoint, the chances that price will go to the upside is much more higher than price going to the downside. So we have a breakout of structure already. Price comes back to retest structure right above the trend line and the ascendant trend line, and of course the key level, giving us a sign that price is likely going to continue to the upside. So for me, if you're yet to join this trade, we'll be looking at buying above the 154.600. So you want to mark that one out too. So 154.600 right there. Let me put this right down here. So buying above, placing a buy stop order above the 154.600. So if you still have a buy position running already, you can take this opportunity to maximize the potential of this bullish move by adding another buy position at the breakout of the 154.600. And in fact, the risk reward ratio here is quite very good because the lowest point here is about 20-25 pips of stop losses. So you want to be having your stop loss way below the 154.450. That's about 20 to 25 pips, and let's see if the momentum will continue. However, if that is not the case and instead sellers begin to gain traction as markets shift their momentum towards the potential rate hike speculation, which was triggered by the Bank of Japan's governor, then we could see selling pressure resume significantly, where the breakdown retest of the 154.450 could be all we need to continue the downtrend move. So I will not be selling unless I see confirmation happen here. All right. So what I mean by that is I will sell the breakdown, then retest of structure. I want to see signs that buyers are finding it difficult to climb back above that trend line before jumping into a sell. And if we join a sell from there, stop losses will be way above the 154.600. That's about 15 to 25 pips of stop loss if we are selling below the 154.450. So this is our crucial juncture for today, and depending on what the data from the economic event from today will determine if market participant will be dumping the US dollar ahead of the weekend or holding on to more of the US dollar ahead of the weekend. So this is my simple view on the USDJPY for today. I encourage us all to mark out this level. Is right here on the 15 minutes time frame. Let's see how the market is going to play out from this particular area. If you have questions or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off as always to see if there are any questions before we move into the final assets of our watch list for this week. And please do not forget to give that video a thumbs up. Your likes are very, very valuable to me. It's like a positive energy for me to continue to do more of this. And secondly, it's one way you can actually help to support this community to grow, as the more the like tallies with the number of people on board, the better the YouTube algorithm pushes the video to a wider range of traders who may find this content beneficial to them. Thank you very much for those of you who had clicked on the like button, and for those who are yet to do, please do so. And thank you very much from the bottom of my heart. So see you about 5-10 seconds from now. All right. So I see you, Sahid Nasir. Good morning to you. Well, I'm doing very well. Thank you very much, Nasir. Trust you are doing very well too. And all right. So okay, Adeni Babalola. All right, no problem. Looking forward to our conversation. Okay, so in the absence of no questions, I want to assume that we are all on the same page. Hope you've marked out these levels and structures accordingly, as we are going to be using them as a reference point to guide our independent trading decisions for today. So with that said, let's move right into the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a tremendously profitable week we've had here on this particular asset. We are running into over 1,000 pips in profit with multiple entries along the way, capitalizing on that uptrend move, which well has been supported by the geopolitical risk. We had the escalating tension in the Russia and Ukraine conflict, which continues to drive safe haven demand appeal. And of course, we know that in situations like mounting geopolitical concerns like this, usually sustain safe haven flow into the gold commodity, which is traditionally known as a safe haven asset. And then we also have concerns about inflationary shocks and a slower pace of Fed rate cuts, which continue to support bullish sentiment around the gold commodity. In fact, we've had warnings from FOMC members during the course of the week. Remember, we had some bunch of speeches from Fed official which continue to emphasize this fact. And then the expectation that the US President-elect Donald Trump's expansionary policies could reignite inflationary pressures continue to benefit gold, given its role as an inflationary hedge. And at the same time, majority due to the potential inflation, which will cause rate hike in the United States next year, where Trump comes in, when inflation is high, interest rate is increased, and when interest rate is increased, the value of the currency increases too as well, making it very expensive to buy the gold. So this is the best time to buy gold right now before Donald Trump comes in, when inflation will start setting in, increasing the value of the US dollar. Right now, the US dollar is still reasonably okay at this point in time to buy gold. So I think everything, the path of least resistance for gold continues to remain to the upside. And of course, we talked about and emphasized this at the beginning of the week. So for the sake of clarity here and educational purposes, let's quickly run through how the week began for us all here and what led to the decision that made us to buy the XAUUSD. So at the beginning of the week, we saw how price started with a very strong move. Price started around the $2,566.50 level, as you will see here, rose to as high as the 2,597. That was about 100 pips thereabout. 300 pips thereabout. We missed out on that one. Personally, that time we were fast asleep here in this part of the world. I think this is during the Asian time that this whole situation happened. However, though we come in a little bit late, but we were able to join the party as we positioned ourselves right above the break of that resistance line at the 2,597. And since that moment, we have continued to buy the XAUUSD. Personally, I never knew that this momentum would go this far. In fact, I placed my TP target for the first buy position at the 2,640, an area which shares a beautiful confluence with that resistant line of the descending channel we identified on the higher time frame. Let me show you that descending trend line so we can see things and be on the same page. So we were able to mark out an interesting structure on the 4 hours time frame at the beginning of the week. So this was our key level where we said we will be looking out for buying opportunities, and that the TP target for any buy position could be along the resistance line of that descending channel, which lines up with that 2,640 I talked about earlier. Now, the breakout retest of this resistance line gave us good opportunities to continue that uptrend move, as the breakout gave us a sign that the resistance line of that descending channel may no longer have the capacity to continue to negate the bullish attempt. So as a result of this development, we were able to identify new structural details during the course of the week. I think I dropped in a couple of structures on the 15 minutes time frame on on Tuesday, Wednesday, and Thursday. And so I have them right here. So on Tuesday, we had a structure here. After identifying an ascending channel on the 15 minutes time frame. So we were using the 2,626 level as a platform for new buying opportunities. So on Tuesday, we took this one, which culminated at the 2,640. That was the resistant line of that ascending channel. So this is it right here. And then during our live session on Wednesday, we saw price drop back down into the support line of the ascending channel. And when price dropped into the support line, look at what we saw here. A little bit of consolidation phase emerges around that area, giving us a sign that there is an indecision going on around that area. So what we did during our live session on Wednesday was to mark out that structure. Let me zoom in so we can see things clearly. Right here on the 15 minutes time frame, we marked out that consolidation phase where price action was confined within the 2,626 and the 2,621. And of course, you know how we do it. Whenever we identify this kind of range bound structure, we exercise patience, waiting for the negotiation to be finalized between the buyers and sellers, where if it does, we will see a signal of where price action is going. If it breaks down the support line, then we look out for sell. And if it breaks out of the resistance line, we look out for buy. And this resulted in that buy position we took here on Wednesday's trading session, exactly about an hour or two before the New York session opened. And since then, look at how beautifully price action had continued to find higher highs and higher lows. So in fact, it was quite a profitable week for us all. Remember, we also had multiple entries along the way, adding more positions at the break of the 2,655 and of course the 2,622 to maximize the potential of this bullish move. So this is what we had on the XAUUSD. I think we also had another development yesterday. I think I updated us with another structure. Yes, I did. I can remember I did. So we identified another structure here yesterday, the 2,670. And in fact, yesterday was quite interesting. That reminds me, I had a sell triggered at the 2,655. For those of you who saw my update on Telegram, I had a sell triggered at 2,655. Price indeed moved about 30 pips before I got taken out in a loss on that one. And I did updated us that I will only be looking out for a buy if the 2,670 got broken. And look at what happened. We saw the breakout retest of structure, and the 2,670 became a platform that pushed price further to the upside. And since following yesterday's update, you can see price has already hit my TP target at 2,700 with about 300 pips on that one. And for those of you who did capitalize on this opportunity, well done and kudos to you. So at this point in time, I do not have any buy position triggered at the moment. And if you have a buy position, for those of you who extended TP, I will be suggesting that you move all stop losses to anywhere around the 2,700 and 2,698. This was where the last consolidation happened. So move your stop loss around that area, secure the current position while we exercise patience and wait for new setups to happen. So in preparation for today, I already have a new technical structure that we shall be using to navigate this market after taking into account the recent development in the market. We've talked about the geopolitical risk, we've talked about the inflation edging, the bullish momentum for the gold, we talked about the Fed rate path speculation, and of course the safe haven flow, which continues to favor gold commodity. Now, in as much as the path of least resistance for gold remains to the upside, we would not ignore the potentials that could also send price crashing to the downside. Remember, today is the last trading day of the week, and usually when it comes to such days like this, we usually see market participants who had capitalized on that huge move to start taking some profit off the chart. And as a result of this, we may see price action move in the opposite direction of the prior leading price action. And in fact, there are various factors that can also support these bearish expectations. One is the stronger US dollar at this point in time. Remember, the US dollar is very, very strong, and this is further supported by the US Treasury bond yield, which is still doing very, very well at this point in time. We also have improved economic data from the United States. We had indicators like the US existing home sales, which did very well. We had the weekly jobless claim count, which also saw figures do very, very well as well, and this further could support the US dollar or profit taking activities anytime soon. So despite these conflicting factors, the broader geopolitical risk and inflation concerns currently dominate and is sustaining the gold's bullish trajectory. However, we will still need to look at further economic releases, which includes the PMI data and the consumer sentiment index that will be released later today for more clarity. Now, in anticipation of this event for today, I have a simple trading setup which I'm excited to share with you. It's a beautiful one, and this is it right here. So I actually missed out on this opportunity this morning. It could have allowed me to add more buy positions to my existing trade, but I missed it and I was waiting for price to come back and retest the structure. So this is the 15 minutes time frame here, and I was able to spot an ascending triangle right here. And by the time I spotted it, price action had already broken out of that resistant line right here. So what I said to myself was that I will rather wait for price to come back, retest the structure, which interestingly lines up with that ascending trend line to continue that uptrend move. Unfortunately, price never came back as we saw price continue that uptrend to the upside. So what are the chances that price will come back into the structure? Well, we don't know yet. We shall continue to exercise patience. But one thing I can say here is that this ascending trend line is going to be playing a significant role to guide our trading decisions for today. And you know how we use our trend lines, of course. As long as price remains above them, we will continue to look out for patterns and structures that supports the idea of buying. So I will mark out those trend lines here. I advise you to do the same. If price action ever comes back into them, I will be willing to buy at the emergence of a reversal setup. It could be a double bottom, inverse head and shoulder pattern, or a falling wedge, which will help me join that uptrend move. But if price does not come back into that structure, then I will be willing to join the breakout retest of the 2,705 area, which is considered to be another psychological level to look out for. So I will mark out that level right there. So we have a 2,705. Hold on a second. I think I have okay, all right, yeah, so we have it to 2,705 level right here. That's a new resistant line for today, Friday, as you will see here. So if price action goes ahead to break out, retest the structure, I'm willing to join. But if the selling pressure continues around this area, then I will look out for this move to come back into any of the trend lines, or even the 2,689 before continuing that uptrend move. Now, in as much as we banking on this uptrend scenario, like I did say, we cannot ignore the potentials that sellers could come in. The US economy is doing very well. We have higher treasury bond yield. The dollar is doing very well at the moment. And today being Friday, we could be seeing profit-taking activities happen. Now, if that is going to be the case, where will it be most comfortable to join a sell? Well, for me to join a sell at this juncture, it is quite simple. We want to see price break down the trend line, retest it before jumping into a sell. And the last time we had selling pressure was around the 2,700, I guess. Yes, 2,700. That was the last time we had selling pressure in this market. I will show you in a moment. Let me label this quickly, and then I will show you what I mean by the last selling pressure I saw here. So I'll give us a blue color to emphasize its importance at this point. So look at what happened here about an hour or two ago. We saw selling pressure. This was where selling pressure wanted to start before price action broke out of that area. Now that same level here, if we project it forward into the future, you will see that it is falling right below the ascending trend line. So as you can see, that's the first ascending trend line. We have the second one, and you know what happens when price breaks down our ascending trend line. We want to be looking out for selling ideas. So I will look out for breakdown and retest of structure before jumping into sell. Now, when I join a sell, that doesn't necessarily mean that price is going to the downside right away, because we still have a bust up here at the 2,689, which could be the retest of the structure that was broken to incite an uptrend move. So what I mean by this is, as soon as price action gets close to this area, you move all stop losses on your sell position, maybe to break even or close in some, secure some profit on that one, while we exercise patience and see how the market will react to the 2,689. If we see a double bottom structure form here or any form of reversal pattern, the breakout of the neckline will welcome the uptrend scenario. However, if price goes ahead to break down the 2,689, then this will incite more selling pressure, giving us an opportunity to add more to our sell move. So selling the XAUUSD, we have two levels: the 2,700, which is right below the ascending trend line. We have we look out for a sell breakdown retest of structure to join the bearish move, and if price gets close to the 2,689, we move all stop losses, secure the current sell position while we wait for new trading ideas around this particular area. So this is what I will be looking at for today. So I encourage us all to mark out this level. These levels, they are very, very important. They're going to be playing a significant role today. And in fact, that reminds me, we are going to be running the Go-Go Challenge today. And this is an opportunity for you to see me scalp the market around this current structure. So we're going to be starting about an hour into the New York session. So I encourage you to be part of that session. So that is my simple view on the XAUUSD for today. If you have any questions, let me know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Money Mastery. All right, so I see a couple of comments from Saeed. Saeed, well done to you. Saeed says here that could you tell how we can confirm the breakout of the support to enter, or shall we just put up buy stop orders so it will pick up the order automatically? Then you went on to say here, whenever I place buy stop order over the support with 30 pips stop loss, I always get out from the position. So how many pips should be the stop loss to avoid the mistake? Okay. All right. So I just read your question now, and what an interesting question that is. And I've talked about this countless of times in this community about how to enter trades. And in fact, during my commentaries, whenever I explain the structural details, I usually mention how we intend to join. So there are times where we have stop orders right away. I do mention that. And there are times when we need to wait for price to break down, then do a retest of structure, which is our confirmation before jumping into whatever direction the price has broken to. Now, in a case scenario where the general sentiment is bullish, there is no point for us to wait for confirmation. So whenever price breaks out of a resistant line, we just want to continue to join it because the sentiment is strongly bullish. And if the sentiment is strongly bearish, and we have price close to a support line of the lower lows and lower highs, definitely we want to be having a sell stop order to join the bearish move. So let me give a visual representation of what I'm talking about. Like this case scenario here, the momentum is bullish Of course, this ascending trend line projects that already, and as long as price remains above the trend line, we want to continue to look out for patterns and structures that support the idea of buying, right? Now, if we find a resistant line here, definitely we want to be joining an uptrend move when price breaks out of that resistant line because it's an uptrend scenario. But if price goes the opposite direction, like say in this case scenario we want to sell below the trend line, we cannot place a sell stop order below the trend line. Why is that so? Because it's a counter trend opportunity. It could turn out to be a false breakdown and it will continue back to the upside. That is a very strong possibility. So instead, we want to wait for price action to come back, retest the structure, give us signs that buyers have lost the momentum, and this will reflect on the chart as continued selling pressure on our lower time frame. It could be the 5, 10, 15 minutes time frame before jumping into the sell. So those are the conditions we are looking at. I've explained this countless of times. And another thing I usually say here is that it depends on the journey you have with us. So if you have been in a profitable journey, you've had multiple entries before, let's say prior to today's setup now, you already have like 4 positions running in profit and you're about to take the fifth one, you can afford to risk and place a buy stop order above that area. You can afford to risk it. You can afford to risk because you are already profitable and you know that if you test it and it doesn't work out, you're only risking some of the profit you had made. But if you are new and maybe at the start of a week you are new and this is your first position you want to be taking, you don't have any leverage, you will have to wait for price to break out and retest of that structure before you jump into that position. So those are the 2 scenarios I usually explain to us here. Now, your second question here says that what stop loss should I use? Well, that's is not a rocket science. So in trading, we need to be very, very flexible. So it's not if I use 30 pips today, that means I have to use 30 pips tomorrow, or if I use 50 pips, then I will continue using 50 pips at my stop loss. No, your stop loss and your TP target varies, and they are subject to the kind of structural patterns you have identified. Now, in this case scenario, for instance, the one on your screen right now, let's say I'm going to be buying above the 2007.05. I can't say I want to put a 30 pip stop loss. I don't know what stop loss I will use unless I understand the structure. Now, this structure here tells me that there is a support at the 2700. So I would like to put my stop loss way below the support line, which is about 60 pips for this particular position. Or if I want to be as cautious as possible, my stop loss should be right below the ascending trend line. Because as soon as price breaks down the ascending trend line, it means that the bullish momentum is no longer valid. So if you look at the distance between where your entry point is and the ascending trend line, that's about 120 pips. And if you don't have an account size that can support that, that means it's not a reasonable trade for you to take. So you have to pass that trade and wait for a setup that is looking promising, that gives you a lesser risk reward ratio. So for instance, if you are buying above the 2705 and you want to place your stop loss below the ascending trend line, that's over 120 pips. If your account cannot manage that, then you just have to pass the trade. It's not every trade you want to take. Now, in this case scenario, if you want to buy at the 2700 now, for instance, if you look at your stop loss, which is going to be below the ascending trend line, what are we looking at here? We are looking at 50 to 60 pips. Then this is still looking very promising to take. So the risk reward ratio here is less. Your risk here is compared to the reward is lesser compared to the one at 2705. So these are ways through which we manage our risk whenever we are taking a particular trade. So that is why I have structures on the chart. So this structures goes a long way in detailing where our entry point is and of course where stop losses are going to be. So if you are buying above a trend line, an ascending trend line, you want your stop losses to be way below the ascending trend line. And if you're buying below a descending trend line, you want your stop loss to be way above the descending trend line. So structures not only tells us entry point, it also tells us where our TP target and stop losses will be. So there is no specific number of pips that you want to have for every trade. Your structures will tell you where your your stop loss is going to be. It could be 10 pips, it could be 5 pips, it could be 20 pips, it could be 15 pips. It depends on what the structure is saying. So this is where flexibility comes in, and in fact this comes with experience. So I hope I made myself clear there, Said. If you have any questions, I'm very willing to explain further. So in the absence of no further questions, I guess we have come to the end of today's Forex Morning Mastery. Said, okay, you're very much welcome. I'm glad you understand that. I love you too, Said. All right, so in the absence of no questions, we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I really appreciate your presence. You guys are wonderful, and I wish you all the best of luck today. So today we were able to take on the 3 financial assets we are monitoring for this week, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD. And we were fortunate enough to identify simple trading setups that we are going to be using to navigate this market today. So I hope you marked out these levels accordingly on your charts. We are going to be using them to help us navigate this market today. And if you have done so, well done, kudos to you. So let's exercise patience and wait for these structures to mature. For those joining us for the first time, you're highly welcome. Hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of our subsequent editions, which promises to be another exciting one. The next one is Monday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to prepare for the new week. And always remember, every decision we make in the market is an educated guess until price action hits your TP target. So with this understanding, you do want to be having a well-defined risk management strategy in place. Risk management is not only about the percentage of risk you place on your account. Risk management has to do with where your stop loss is going to be as well, and how you're going to be managing that trade using the structural patterns you have identified on the chart. So you need to incorporate all of this together to have a well-defined risk management strategy. I wish you the best of luck on that one. And it's on this note we have come to the end of today's Forex Morning Mastery. We had over 10-12 people today, and we only have 4 likes. Well, that's unfortunate. It happens like that. But if you're yet to like the video, please do. It doesn't cost you anything. It only goes a long way in supporting the channel and also inspire me to do more. So I want to wish us all the best of luck today. And for Go Challengers, we are going to be back here again in the next 1 hour, 11:55 p.m. Let's say an hour before the New York session opens. We want to scalp the market together again. So I look forward to seeing you guys in that particular session. So it's on this note I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.